Anna Falk with Incline Business Essentials, and today we're going to take a deep dive into what a profit and loss statement is. There are three main financial reports that are generated for your business through your bookkeeping system that will give you the health of your company. These reports are your profit and loss statement, your balance sheet, and your cash flow statement. Your profit and loss is essentially the measure of whether or not your business is profitable. This report is also known as an income statement. Profit and loss and income statement are used interchangeably. They're exactly the same thing. So a profit and loss statement, again, it is the difference between your income and your expenses, and it gives you an overall health of your business. The profit and loss statement, otherwise known as an income statement, in a nutshell, is just showing you whether or not your business is making money. Your profit and loss is a measure of your income versus your expenses over a given period of time. The income for your business is the money that you are generating from your clients. So say you're a ski instructor and you're charging your clients for your time up on the hill. This is your income. Say you're making cookies. The money that you are charging for those cookies is your income. So really, your income is just the money coming into your business to pay you for the services or products that you are providing to your clients. On the flip side, your business is spending money. These are known as your expenses. You have to purchase raw materials if you're making cookies. You might have to pay for software if you are booking lessons of some sort. You will likely have insurance for your business. You might have rent for your business. You might have utilities or labor. Whatever those expenses might be, it's important to know what you're spending, especially in relation to your revenue. So your net profit is the difference between your income and your expenses. Income minus expenses equals net profit. In other words, you're making money if your income is more than your expenses. This is where you want to be. As a business owner, you must know this about your business. You have to know if you're profitable or not in order to make decisions about your business. So now let's talk a little bit more in depth about the types of revenue and expenses. For a small business, revenue is typically fairly easy to organize, revenue or income. Fairly easy to categorize and organize. You might be an electrician, so you're providing a service and selling parts. You can group all of your sales into just one category called sales, or you can group these into two different categories, sales of service and sales of product. This would give you a little more detail about how your business is performing, but just remember that these should be kind of big bucket categories for your income. So now let's talk a little bit more in depth about the types of revenue and the types of expenses. For a small business, revenue or income is fairly easy to categorize. You might be an electrician, so you are providing a service and you're selling parts. For an electrician, you could categorize all of your income just as sales and put them all into one bucket. Or if you want some further data about your business, you can separate them into two different categories, your services and your sales of product. These are overreaching categories. They should be big picture. You don't need to get too detailed about these categories, but this is an example of how you can categorize your income. Expenses, on the other hand, are a little bit more complicated because you really need to categorize these based on the IRS predetermined rules for expense categorizations. You want your expenses to be considered deductions, and so for them to be considered deductions, they must follow those IRS categories. These categories are going to include things like rent, insurance, utilities, software, IT expenses, and etc., depending on your business. So again, make sure that you categorize your expenses based on those predetermined IRS categories, and this will not only satisfy the IRS, but it will give you the data that you need about making decisions for your business. So remember, regardless of how many categories you have, your total income minus your total expenses will determine your profitability. Now, your profit and loss, as we've mentioned before, is a measure of your profitability over time. So you can look at your profit and loss for a month, you can look at it for a quarter, or you can look at it for a full year. It's important for you to look at the larger periods of time, like a full year, because this gives you the big picture information about your business. Are you profitable, or were you profitable last year, for example? Then smaller periods of time will give you some really good detail about your income and expenses in little snapshots. For example, in the month of April, maybe your expenses go way up because you have a lot of subscriptions that are renewed in April, and so you have to spend a lot of money. Are there ways that you can either spread those out over time, or realize that you need to have then more income coming in April so that you're profitable in that month of April? On the flip side of that, maybe in October you have very little income. There's no snow in October, so you aren't able to give ski lessons. Can you pre-sell your ski lessons? Can you offer discounts in October for people who are purchasing ski lessons in future months, so that you are figuring out how to have some revenue in those slower revenue months? Those types of analytics are really important for you as a business owner, so that you can make decisions about your business and plan your business and really understand your cash flow and your profitability over time. In a nutshell, are you making money? Is your business in the red, or is your business in the black? If your business is not making money, you need to identify this as quickly as possible so that you can make the necessary changes to ensure that you're profitable. If your business is making money or is profitable, how can you maximize that revenue? How can you ensure that you are getting the most profit that you can out of this business and making the decisions necessary to grow your business in a way that makes sense? Your profit and loss or income statement can help steer your company to that path of success. If you're enjoying this content and want to learn more about bookkeeping and the financial health of your business, please like this video and subscribe to my channel, and I hope you take these tips as your business grows and develops.